Thanks for clicking. The Canadian Real Estate Association, the CREA, has released its data for the month of September, showing modest increases in sales.
It's only just begun.
Indeed, this is no doubt going to come as a surprise to the CREA, who, if you'll remember, was pretty confident in the spring that rate cuts were going to bring the buyers back to the market. Fear not, though, says the CREA, it's not that it was wrong, it's just that buyers are waiting for even more cuts.
And I am not lying today!
Thankfully, though, the CREA is putting forward the visionary himself, CREA economist Sean Cathcart, to let us know what to expect.
Next spring, hold on to your hats.
And that could in fact be the case, but let's take a look at the details, as well as the sources being used by the CREA. And while I do applaud the CREA for using sources, next time we'll just work on reading them.
That's out of the... I'm not doing it!
So what I want to do today is go over Canada's real estate data for the month of September, take a look at the interview with Sean Cathcart and how he sees 2025 shaping up, and then discuss some implications. There does appear to be a consensus building that we might see a jumbo rate cut coming from the Bank of Canada next week, and we'll obviously have an update out on that announcement and the press conference on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into this data. Onto the data. First up, the benchmark price, the price of the home, which represents the most popular set of features, which was up, though minorly, in September. The benchmark in August was $717,800, and that bumped up by about $400 to $718,200. So the benchmark price up about $400, not really anything to speak of.
There's no stopping it now.
With that said, the average price was up and much more substantially, coming in at $669,000, up about $20,000 from the previous month's $649,000, and still up about $14,000 from this point in time last year. This point in time last year, back when the CREA was noting that home sales had dropped for the third month in a row.
Yeah, home sales recorded over Canadian MLS systems posted a 1.9% decline between August and September 2023. And that was the third monthly drop in a row.
But back then, not to worry, Cathcart noted, 1 month was nothing to be worried about.
But as we always say, and we said before, one car doesn't make a parade, 1 month does not make a trend.
But what about right now? Fast forward, sales are up by 1.9% and up for the third month in a row. I'm sure we'll have some sort of that same advice exercising caution.
Home sales increased month over month, albeit only by 1.9%. Which isn't huge, but it's also not nothing. So if you think back to June and August, they were also months that had that were following a rate cut, and they also saw sales increase. So we're now 3 for 3 on residential sales rising after a rate cut. And that, my friend, is a trend.
Just so we're very clear on credibility, both of the CREA's analysis and those who depend on it. With that said, interest rates are coming down, and if you believe Stats Canada,
I don't.
Fair enough, but if you believe Stats Canada, for all intents and purposes, inflation is coming down as well, and we could be seeing some jumbo rate cuts coming from the Bank of Canada. In the CREA, now that it's finally, after years, true that the Bank of Canada is cutting rates and that could help the real estate market, was quick to point out that fact.
Expectations around the future path for interest rates have changed dramatically. As opposed to this multi-year trek back to what the Bank of Canada considers a neutral rate, which would be something like 150 basis points below where we are today, markets now expect the bank to get there by sometime around next spring or summer, a lot faster, and with a lower terminal rate as well. So that means where rates finally bottom out might be lower as well.
Now, at first glance, it looks as though the CREA has done its homework, noting that markets expect the Bank of Canada to cut rates dramatically, and citing 3 sources to demonstrate that fact. Let's take a quick look at the sources. The first one from TD doesn't actually say that rates are going to fall dramatically at all. All it says is that to expect 2 more cuts this year. That's not exactly dramatic cuts, and the report also notes what we've talked about so many times on this channel, that with these interest rate cuts coming, there is a risk that they could come amid a weakening economy and slow job market. The second article cited by the CREA came from the Financial Post, showing a 2.75 interest rate by mid-2025. was an interview with Dawn Desjardins of Deloitte, where, yes, she noted that the bank was going to be cutting rates steadily by 25 basis points per meeting until summer of 2025, which is kind of already an expired prediction, but she also noted that those cuts are not coming amid a strong economy.
Consumer confidence in particular is really quite depressed. Certainly we're looking at things like good on the good side, inflation coming down, interest rates starting to come down, but still affordability very constrained and labor market conditions starting to weaken. So
why does that even matter?
And yeah, we've talked about this before on this channel. These cuts are not coming for no reason, and if the market is going to behave the way the CREA says it will, then the economy is going to have to hold. Something that Desjardins stresses and Sean Cathcart forgets.
Has been a relatively stable market. And as we move forward, rates coming down, some clarity that the job market is holding in, it does suggest that we will see a pickup in housing activity as we go through 2025.
Yeah, the economy, the real estate market, involves nuance, complexities, subtleties, etc. And the third article cited by the CREA comes from Bloomberg on August 26th. That article stressed the Bank of Canada's ability to cut now that the U.S. labor market was weakening, noting that with the Fed cutting rates, Governor Macklem now had more room to normalize borrowing costs without worrying about the value of the dollar and therefore inflation. Since then, the U.S. added 250,000 jobs, and we've seen much more caution on the direction of the Fed's rate-cutting path. So, the three sources cited by the CREA to show that the Bank of Canada is going to be cutting rates dramatically. The first one doesn't really talk about dramatic rate cuts. The second one discusses rate cuts in the context of a weakening economy, noting that that economy is going to have to hold for the real estate market to take off. And the third one is kind of expired at this point, working off very old US data. And it's not that the CREA is wrong, it's that the CREA is pushing this narrative, this very assertive narrative, that it knows what's going to happen going forward into 2025, without any mention, any acknowledgement about the economic backdrop, which, as we saw with Tuesday's inflation data, that economy is continuing to weaken. See, that article was 1 day old, which gives me a lot more relevant information than I would get if I got an article from August. And I also get even more information when I read it.
Really?
Like that the author doesn't understand the difference between disinflation and deflation, noting the disinflation in the CPI as clothing prices were dropping, which is of course deflation, but that's neither here nor there. Regardless, the point is that the CREA continues to push this narrative that these rate cuts happen in a vacuum, and even the articles that they cite say that they don't. Yet, the CREA is pretty confident about house prices heading into 2025.
With prices, we're forecasting an average national home price of around $713,000 next year, which would be up about 4.5% from this year.
Given that the average price is sitting around $670,000 right now, that'd be about a $40,000 increase by this point in time next year.
If you're lucky.
With that said, the CREA is not 100% confident in that prediction.
And just as a final note, I think with interest rates expected to do what they're expected to do, the risk here is that a lot of our forecast numbers that we've just published might end up being stronger.
The only problem you're going to have is that you didn't buy more.
Now, that was a joke. That doesn't make realtors Jordan Belfort. Watch the movie very, very carefully. Never, not once, does he say the word bruh.
Feel traumatized, bruh.
So, sales are up, though marginally, in September after the Bank of Canada's third rate cut. We are expecting more rate cuts coming down the pike from the Bank of Canada, and news at 11, the CREA says that that will lead to dramatic price increases, even potentially higher increases than predicted by the CREA.
That'll show them.
And, like we said, they very well could in fact be right this time, so long as the economy holds. And that, I think, is going to be the big if heading into 2025. These rate cuts are not happening for no reason, as we've been talking about for months and months, almost years on this channel. These rate cuts are happening to pump up the economy, to prop up the economy amid a major weakening. And as we've saw before in different videos on this channel, in general, recessions are not good for the real estate market. With that said, we will continue to track Canada's economy on this channel. Click like and subscribe if you want to get those updates. But for now, thanks so much for watching.